And joining us now as we take a look at the market trade action that we saw on Tuesday coming out of the holiday weekend. A slow grind to the upside in the grains and oil seeds, but an overall positive day there. We are welcoming in our good friend Bill Biedermann with agmarket.net. Bill, great to have you on the show, sir. Happy New Year. I haven't talked to you since last year, so great to have you back on Market Talk. Hope you're doing well.
Well, I am, and it's exciting to see the market doing well also. So it's all good, Jesse.
It is all good. It is all good. Well, and this market doing well. I was a little concerned right away overnight into this morning. I know we got that negative GDP news out of China. We're watching the weather forecast. We're trading all this, and it's looking like this might not be a good market day here on Tuesday. But then we digested the news. It seemed like the money flow came back in, started looking at the fundamentals from last week's USDA reports, and we had an overall positive day on Tuesday. Bill, is that kind of how you felt about the grain trade?
Yeah, Jesse, I think one of the things that keep haunting me is the size of the funds position that they still have, and they're in building and beans are up to, they've gone from 60,000 contracts all the way up to 144, and they're still maintaining about 160,000 contracts of corn. This is the trading funds. And I think the thing that stands out to me on these reports, Jesse, is the fact that the carryover didn't change. 1.2 billion bushel. I think we added 1 day's worth of supply to the balance sheet. We went from, I think, 32 to 33 days. But here's what's crazy. They lowered demand, right? And we still didn't see the carryover increase, which tells me that, and we all knew this from a few years ago, the quarterly stocks, 1.2 billion bushels is what it takes to run the pipeline. So did they lower the demand because they had to in order to maintain the stocks where they're at? Or did they lower the demand because demand has been slow and they needed to lower the demand anyway? And maybe it's a combination of both, Jesse, but I think the key point there is that this demand number is about as low as you're going to be able to push it down to. We exported 2.7 billion bushels of corn 2 years ago, almost 2.5 last year. They're down to 1.9 on the estimates for supply and demand today. So I don't think they can lower it anymore. And if the South American crop gets worse, and right now, the Argentine crop is not as small on USDA's balance sheet as what the privates are saying. And if they lower that down to the privates' numbers, does that shift some demand to the U.S.? And if it does, then carryover won't even be at pipeline. So our O-crop stocks is still extremely tight. And I think that's what we're focused on today. Now, 4 weeks from now, all the farmers will be at the banks telling them how many acres they're going to be putting in, and it'll be a totally different situation for new crop. But on the O crop, we need the big South American crop in order to not get any more demand on the U.S.
Well, and thinking of those numbers that you mentioned with those USDA reports, it's interesting how USDA kind of massaged the numbers to make them work, so to speak. But to your point, things are just so tight, Bill, that it was a bit surprising with the numbers that we got, and we're kind of doing our best to feed this bull here. But man, things are just so tight overall here, Bill.
Yeah, there's just really no room, which means the downside potential of the market is probably limited. I mean, we could always sell off based on the charts and the technicals and things like that. And if you wanted to say that, if we can't push through these highs, we might have a double top on the market. All those things are possible. But the reality is you're probably not going, to $6 on old crop corn. Maybe $6.50 again. That's a decent level, and that provides a fairly good value for end users to be buying against a very tight situation that could get tighter. But I don't think it's going to get any tighter based on where we're at with demand today. But if we do see a shift in demand by lowering that Argentine crop another 4 or 5 million tons, if you just shift 2 million tons to the United States, that's 80 million bushel. And now you're definitely below 1.2 billion. So it is that tight. And it's going to be interesting to see how the next couple months. Now, I will say this, the outlook's going into the 2023 crop. I've run the numbers here several different ways. I'm coming up with about 2 billion bushels, no matter what. Assuming we get 91 million acres, which is what most people are saying, we could be in for a pretty negative market from whatever, whenever the market starts to trade that. and it won't trade it completely, but once it sees yield, if yield is 176 or better, you're going to have a pretty decent carryover. If it's 181, your carryover is at 2.4. So, the numbers are going to be hard to be bullish unless there's a weather problem in the United States once we know what our acres are.
It feels like to me, your explanation there, that we've been talking about this for months, whether we're talking old or new crop, it would probably be smart for farmers here beginning of the year to try and protect that downside risk in both old and new crop, and whether it's floors or whatever, option strategy they're looking at, just because, especially on the new crop, it seems like there could be that downside potential there. It's just smart to protect that and manage that risk right now, Bill.
Yeah, there's ways to do that, Jesse, that we've been trying to encourage people to do, and that would involve buying some options, either buy some calls, make some sales, buy some calls, or just buy some puts or do something like that, where in that situation you're not even tied to a delivery in case you have a bad crop. But yes, putting a floor under your crop and keeping the upside open until we know some of these unknowns are no longer unknowns is a really smart thing, because if we do start to trade the bearish potential scenario of 2023, the market will go down regardless of how bullish we are, and it'll go down because it's seeing 2.4 billion bushel carryover, and I'm done buying what I'm going to buy, and I'll only buy more if I have to. If the weather's turning bad, then I'll buy more. And if that's the attitude of our grain buyers, everything will start to work lower. It's a little early, though. I don't think you turn bearish yet, but I think you'd be well aware, like you're saying, that this bearish outlook is going to be unavoidable in the next 6 to 12 months if we get decent acres here in the United States and get a good crop. I don't care what happens to the South American crop. It's that significantly different. So two different markets. Old crop, crazy. New crop, heavy.
Definitely. Well, and I know too, before the reports, we were seeing a fair amount of farmers selling out in the countryside, and you could see that impact in the market. And then it just feels like all this USDA, this data dump, kind of changed the story, changed the game a little bit here. I guess I haven't looked much this week to see if there's that continued farmer selling. I've seen pictures on Twitter, people lined up at ethanol plants selling corn. I mean, 3 mile long, lines of semi trucks, but I know that farmer selling's out there, but I wonder how much maybe, things have been changed here with just the outlook from all the USDA numbers last week.
I don't think anything's changed in the immediate. I think it'll take a couple of weeks, because I think a lot of guys contracted some corn and they got to deliver on those things. But, we're still seeing basis weakness. Like down at the Gulf this morning, we saw corn down 2 cents. We saw beans down 2. We saw beans, the CIF rate on beans was down 12 cents this morning. So, and some of that's due to freight and barge and better river values. But nonetheless, we're not seeing the cash market screaming for the need to buy grain right now, because they've gotten some.
Bill, as well, I just wonder too, looking at corn and beans, and you hit it on the head, watching this crop here in the US for 23 and South America, of course, Brazil. I think some folks are saying, well, Brazil can make up for Argentina, but that Argentina crop is so bad right now. I know that is going to be a short-term concern here in this market, and I'm sure we're going to be just trading weather headlines here for the next couple of weeks.
Well, the carryover on corn in the world has dropped fairly significantly. I mean, you take China out of the deal and you're down to 89 million metric tons, which is relatively tight. And if you look at where they put the Argentine crop at 52 million metric tons, that was down 3. But a lot of the privates are right around 50. It's 49.5 to 51, I believe, is the range of estimates. So USDA at the minimum has another 1 to 3 million metric tons to go on the corn in order to get in line, with the private estimates. So I've heard some numbers as low as 46. That'd be a 6 million ton revision. You're talking, I think, I'm not 100% on that, but I'm pretty sure if it's 6 million tons, you're going to have to shift some demand to the United States. Or
yeah, go ahead, Bill.
Or you would have to ration the world demand down, one or the other.
Bill Biedermann, agmarket.net, our guest here today on the show. Bill, thinking China, how much are you concerned about the GDP numbers that we got Tuesday? 3% growth in 2022. Chinese government expected 5.5%. I know that was an initial headline that the markets kind of traded Tuesday. How much are you concerned about that number out of China?
If I continue to see that happen, especially now, of course, their hog herd grew pretty substantially, but their total population of people went down too, and that might be more of a concern than anything. But Jesse, I think what's happening is all these countries are going to see downward revisions in GDP. I don't think it's going to change anything on a country to country wide basis. Um, I think the main thing right now is when you look at their shortfall of production versus production, there's still about 20 million metric tons difference. I believe the import estimate is at 18. I believe that we're down to only looking to supply 8 or 9 million tons of that in corn. We should be doing 10 or 15, right? But Brazil's coming on board. So I think that's a bigger picture to be watching to see what happens, because the next 2 months is when we really pick up our corn exports. If we don't, and China is delaying shooting for that now okay to import Brazilian corn market, then I think we're in some pretty serious trouble.
Well, and as well, tied into this, thinking about whether we're talking corn, soybeans, with all the problems in Argentina. I know this is more of a soybean story. There's been talk that Argentina might try to import some beans from Brazil to meet their crushed, demand if their crop is poor. There's talk of Brazilian corn going to Mexico. Obviously, China in the game. Thinking about exports from the U.S. to China, still feels like these deck chairs are just kind of shuffling around here with all the different things going on. That I agree with you. It's going to be an interesting couple of months to see here, especially corn export wise and soybeans too. Just what China buys, what do they do, where do they go? It's very interesting how this is all kind of sorting itself out right now.
Yeah, we're pretty fortunate to be associated with a group of guys that were former cash traders. They follow the freight markets, they follow the rail, the ocean freight. The lift valuations going into different ports and things like that, vessel lineups, and so they seem to have a pretty good handle on it. And obviously there's a big concern, and all of those things are going to affect the U.S.'s ability to remain competitive, just as much as the Board of Trade price going up and down. So it's a very dynamic market right now, very competitive market right now, and like you say, with Brazil and Argentina kind of opening up their gates a little bit with phytosanitary issues with China and things like that. It's in Argentina shipping out a few beans instead of just meal. Those are big dynamics that change that we don't really read in the daily headline. But again, we're fortunate to be surrounded with about 8 or 9 guys that's where their background comes from.
Let's talk the wheat market a little bit here, Bill. Any thoughts there? I know moderately higher on Tuesday. This wheat market's got its own set of fundamentals and stories. As you look at things now, a couple days post USDA reports, what's your thoughts with what's going on in wheat right now?
Well, I think the wheat's getting hammered again by, it's not getting hammered on the marketplace, but I think that what's keeping buyers to come in and pushing this thing up 20, 30 cents and get it back up to where it was a couple of weeks ago is the fact that Russia is still very competitive on their prices. And you've got some potential moisture coming in. I don't think it's going to get as far south as the market wanted to see when we were trading much lower during the nighttime, but then during the day we picked back up because some of that moisture was pulled out or moved north, really. So when I look at the supply and demand, I think we've hit value. I wouldn't be surprised if the wheat market hasn't bottomed. I think at the very least, you see that Kansas City wheat shoot back up towards $9. I think there's going to be some issues with the crop unless we get really good weather going into tiller season. And of course, that can make up for a lot of losses.
Yeah, that Kansas City wheat crop, I know just the concerns are there, but what is it? Wheat has 8 or 9 lives, I think, Bill. So what are we on? Live number 6, I think, at this point. It'll just be a case of see what happens when we come out of dormancy here, I think.
That's right. And right now, I mean, everybody who's any kind of a trader at all would be looking to sell the Chicago wheat in the $7.80 to $8 range. And so, I mean, I think the Chicago wheat's the one that's really got the most potential to move lower. If it's going to move lower, it would be the Chicago. So keep your eyes on the trend of that. But if you want to be friendly and holding on to anything, it's probably the Kansas City that you'd want to hold on to, at least until probably March.
Over in the protein sector, I know cattle lower on Tuesday, hogs were higher there, and I would have to assume, cattle, some of that was the corn market moving back higher. I saw some interesting data. The managed money, massive net long in cattle, while they let go a big liquidation of long positions in hogs on Friday. CFTC reports. I think that maybe speaks to some of the market action too that we saw on Tuesday, with hogs moving higher and cattle coming under pressure. Would that be some things you were seeing maybe in that protein sector overall, Bill?
Yeah, I think that's accurate. I think also the fact that the Feb hogs just got so low that we got down to a point where we're close to what I would think would be value. Now it's hard to know what economic value is on hogs when so many of them are vertically integrated. But
Mhm.
point being is that we got down to some very cheap, very very oversold futures markets. The feeder cattle market really took some pressure on Tuesday. And if you look at that commitment of traders reports, these funds are actually selling these feeders pretty heavily. The cattle market, everybody's bullish, and it would be nice to see a further washout. I'd love to see that market get down into the 158 range. That would be, I think, really healthy for the market. From a technical standpoint, that would be enough just to go down and wipe out a few speculators. We'd like to see a few those guys get knocked out. So when we reverse and go back up, they'll all want to get back in, right? But the trend in the cattle is still long-term bullish based on supplies. That's not going to change for a long time until we get to a price that we reach equilibrium and we start seeing incentive reasons to rebuild the herd. And on the hogs, I really think that's just more of a technical trade. The high end is 96.5 and the low end is 86.5.
And I think with cattle too, with a holiday shortened week this week, we got to get cash straight in here, but we got a cattle on feed report Friday. How much will we start squared up positions, say Wednesday, Thursday, Friday morning into that report, Bill? I think that remains to be seen as well.
I think so too. And I think if someone's out there with a lot of profits on their position, they're going to probably want to protect those profits somehow. That means they might lighten up a little bit, or they might sell another month, and they might buy some options. Usually you'll see that option volatility increase right until the day of the report. And then the day after the report, whichever side was wrong, they'll bail out of those pretty quick and try to minimize their losses.
Bill, great thoughts and insight as always. Before we run out of time and let you go, any other final thoughts you want to share with us here today?
No, we're looking forward to seeing everybody in a few weeks there on February 6th in Nashville, and we're having a great sign up. So I don't know if there's any rooms left. I think there are, but probably not at the discount rate. So we're really excited about that, Jesse.
No, and I know that's going to be a great conference, and folks can get details agmarket.net. I know we'll be there broadcasting live on February 6th as well at the Grand Hyatt in Nashville. And Bill, of course, if folks want market advice anytime, agmarket.net, a great place to start to get in touch with you and the team there, isn't it, Bill?
Yeah, I would just go to the agmarket.net website, and you can sign up for free intel. Just go to the intel block and go down there to sign up for 30 days of free, and it's a great way to get started.
Agmarket.net. With that, Bill Biedermann, always a pleasure, sir. Thanks for joining us today. Have a great week, and we will talk to you soon.
Okay, thank you.
That's going to do it for the show today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.